Hi traders, welcome to Trading Week Ahead with me, Ken Calhoun, where you'll see my top picks for the week ahead. Featuring stocks and ETFs, you'll also get to watch my top Forex trading picks, plus see what's new with E-mini trading and more. All information is for educational use only. Don't make actual trades based on this. Instead, learn how to trade with me. Now, let's see what's going on in this week's markets. Hello active traders, this is Ken Calhoun, president of DayTradingUniversity.com, and I'd like to welcome you to this new episode of Trading the Week Ahead with my top trading picks and patterns for the upcoming trading week of April 23rd, 2012. As you can see by looking at this NASDAQ Composite 15-day chart, not much going on in the broad markets this last couple of weeks as investors and traders are largely sidelined on low volume as we've seen consolidation here for the last couple of weeks. However, it's a good market for select cherry-picking intraday trades and very rapid round trip in swing trades, say 2 to 3 day round trips, and intraday is the type of trading style that matches a consolidating market because we don't have large trends to capitalize on. This upcoming trading week, I'm going to be looking at 7 different stocks most closely, starting off with GDI, Gardner Denver. You can see it's taken out a new 15-day high. Has had a couple of false breakouts here, but since we've had strong buying strength over the last week or so, we're going to see if this continues on up into new highs over the 65 in the week ahead. Next up, Gap Stores, GPS, the ticker. This one is in a confirmed 15-day high cut breakout pattern continuation, so I'll be looking at trades in this potentially if it gets over, say, 28.5. GPS next up. Now we've got HOG, Harley Davidson, HOG, the ticker. Friday we had a really good high volume spike into the close, taking it up to just under the 52 here, right? You can see an ascending triangle, a good cut breakout on 2-day highs. My classic 35 cents over previous day's high trigger process would have worked great if anybody had taken that. Well, let's keep Harley on the radar and see if it's able to take out new highs over the 52 in the week ahead as well. It's one of the stronger high volume closed charts that I've seen out there. Next up, let's take a look at SanDisk, as in DK. It's been beaten down quite a bit from an earlier range of 50 all the way down here to 35 on a big gap down on Friday's session. It just gapped down and went sideways. I'm going to see if it trades outside of this immediate trading range in the week ahead. Either way, I'll be prepared to trade that. I'm going to use 34 support, 37 resistance. I'm going to see which way SanDisk breaks, but because of the volatility, this one certainly has my attention as a trader because of the high volume we had on Friday on its large gap down. And I'd prefer to short this on new lows, but if it comes back to life, I'll be ready to trade it that way too. So keep SanDisk on the radar. Next up, Seagate, maker of hard drives. You can see here we've got breakouts over the 28 that slowly moved up into play in last week's session. I'm going to keep this on the radar for a swing trade if it breaks the 30. And again, when I say breaks over a specific number, typically I'll be looking for entries anywhere 35 to 50 cents above that particular price point. So I may well put a buy stop order in for Seagate at 30.35, for example. Not that that's a trading recommendation, it's for paper trading only, but that's at least how I like to look for trades in my own setups. And the last one, TPX, Tempur-Pedic, another large gap down on Friday. And as I teach traders, gaps usually continue in direction of the gap, and that was no exception in Friday's markets on Tempur-Pedic. It fell out of bed. You could see 84 to 74. A little bedside humor there. 10-point gap down, moved another 8 points. Big whopping drop here. I'm going to keep an eye on TPX for the week ahead, preferably to look for shorts under the 64, but if it comes back to life over major resistance, say 70.7, 72.5 for a swing trade, sometime in the near future I'll be keeping an eye on TPX as well. But those are the top charts I have for you in equities. GDI, GPS, HOG, that's the best high volume breakout, by the way. SanDisk on its gap down. Seagate on a slow grind up, a continuation cut pattern, and Tempur-Pedic on its gap down. We'll see which way these break in the week ahead. The best chart award, though, goes to Harley Davidson, HOG. And just a reminder, too, for my extremely accurate calls in Starbucks on the longs here, I told you the high there was 62 and a good time to start scaling out in last week's episode, and you can see, sure enough, it sold off sharply. At that time, I had set the long trigger up over, say, 62.5 or whatever it was, and you can see that we did break up to just under the 62, and as I said, that's a good place to tighten in trailing stops because, sure enough, the market takes things back. Following good trends like this, you can never predict where the top is going to be, so you always want to tighten in trailing stops. I still like Starbucks if it does take out that high later over the 62.5, but so far it looks like it's chopping and dropping, so I'm going to leave this one alone for now. Chart of the week goes to Harley Davidson, HOG the ticker. That's the best of the charts that I can find for you out there in equities. If you're an active stock or ETF day or swing trader, then you'll definitely want to try out my new Chart Scans Daily Trading Alerts. You'll get to see my top 4 bullish and top 4 bearish alerts with specific price areas to learn from before each day's opening bell in the members area that you get to log into. You'll also get daily Qs alerts as well as one other top moving ETF, and you'll also get swing trading alerts updated each week. So go ahead and visit www.chartscans.com and sign up for your trading alerts offer today. Next up, let's take a look at our exchange traded funds or ETFs. Now, in general, as an ETF trader, unless you're solely day trading them, you really don't want to be trading exchange traded funds that are index tied during consolidation regions because the trends only go, say, 1 or 2 days before pivoting. So what you do want to look for are the exceptional ones. And right now, real estate ETFs are the strongest of the sector-based ETFs that I can find. DRN, or Direction Daily Real Estate Long, you can see testing previous highs here at the 70. And similar, URE is our ProShares Ultra Real Estate. It has the same exact pattern, of course. Personally, I like the DRN better because the volume's a bit higher. Same exact chart pattern and similar pricing. So anyway, keep DRN for potential long breakouts over the 70.7 on the radar for the week ahead and support line at the 68. As always, in case our market sells off, I'm looking for new entries in our inverse or bear ETFs and my 2 favorites right now, FAZ. We'll see if this takes out new highs intraday over, say, the 22.8, over the 24 and a dime and so forth. For swing trading, I'm just going to use the 24 as major resistance, at least in my own trades. And then VXX, the other one, it moved up and has dropped since. So during our market consolidation, I'm going to use just over the 19 as R1, and I'm going to use 20.7 as R2 for scale and triggers. If our market sells off, this will go up, and so I'll be looking for entries in those. But overall, best playing ETFs right now are the real estate ones, so keep an eye on those for the upcoming week ahead as well. Speaking of inverse or bear ETFs, I've arranged a Trading Short ETFs video preview link here for you, and I've got a complete 1 hour, 42-minute step-by-step event that I had just recorded back on April 5th, so it's relatively recent, and it's only $97 for a complete video download in Blu-ray resolution. It's 1920 by 1080 pixels, so it's crystal clear, and it teaches you step-by-step how to trade the inverse ETFs. Now, they trade, the pricing's relatively inexpensive, and they trade exactly like stocks. I even trade these in my Fidelity SEP IRA, so you don't even need a margin account. So you're not shorting anything. You're just buying something that trades like stocks that go up when the market goes down. Things like FAZ, VXX, QID, and many others. What you'll learn in this video, I've got 3 sections for trading short ETFs made easy, how to choose which ones to trade. This is kind of scanning and step-by-step pattern recognition skills and trading strategies you can start using. In the second part of the video, we look at precision entry and exit, what I call ETF accelerators. And this gives you a trading plan blueprint to help manage each ETF trade from start to finish, how to scale into and out of each trade with careful stops, and the rest of it. Much to learn about and how to manage these entries. And then finally, some of the success tactics, some of the best lessons learned that I have in my own years of trading thousands of trades in these instruments, how to make changes and how to set your entries, exits, stops, and P&L targets, your profit targets whenever you trade these. So go ahead and take a look. I'd certainly like to welcome you aboard to this. You can download this to get a preview of it, the complete 22-minute preview It's just the first 20 minutes or so of the event, so you can see how good it is, and then you can go ahead and order from this link at www.tradingshortetfs.com. For our E-mini traders, we have some interesting divergence between the ES and the NQ. You can see our NQ is much weaker. Okay, so if you're trading E-mini NAS, you can see we're at support here right near the 2670. And so it's a bear cup. You could see shadows to the downside of the candle, so pivots off of those. But if it starts losing support under, say, 2668 or so, that may be a good place to consider selling. I would not be using a long trigger anywhere until we get above this opening range gap, which should be around 2697 or so in the NQ. Now, most E-mini day traders trade the ES, and it's been tougher, right? It's been brutal this last week. If you've been day trading, if you're a fellow E-mini day trader, you know that we've had consolidation, and with that in our markets, it makes it tougher to trade. So what you have to do is play a tighter game. I like to keep my stops within, say, 3 to 4 ticks is the goal. And what I'm seeing in a consolidating market is a lot of gap fades. Okay. In a rally market, you tend to see gap continuations, or a trending market. In a sideways market, they're not so sure. So frequently you'll see these things where gaps up, then drops. Gaps up, then drops. So keep an eye on gap fade potential plays up. Use a set of entry 3 ticks to sell under the pre-market trading range, or 3 ticks above the high in case it gets legs and takes off. But right now in a consolidating market, you have to play it tighter. So of the many contracts out there, the NASDAQ one actually looks to have better volatility and a good downtrend. So we're going to look to see for new lows in this. This is a 3-day chart. When I'm day trading these, I'm looking at the 1-minute advanced chart. But I always like to, the week ahead type videos, I like to give you a top-down look at major support resistance lines that can help set the tone for how to trade the minis for the upcoming week ahead. If you're an active E-mini day trader, then you'll definitely want to get my new Emini Inferno 2012 release for active traders. It captures 3 entire live market sessions on region-free DVDs and much more. Go ahead and take a look at the preview video I've put together for you at eminiinferno.com. And for our currency traders, our Forex charts are showing strength in the euro lately, right? If you click through the different euro charts, you could see that those are showing the best relative strength. Of all of them, the euro dollar and the euro yen especially are 2 extremely strong breakout patterns. And again, you like to look for these 7-day highs following cup patterns with an ADX over the 30 or the 40. I like the 30 is the earliest signal. And you can see that sure enough, this is our euro to the Japanese yen. You can see it's taking out new highs. I'll be looking at this over, say, the 108.2 or so and see if it takes out new highs or if it drops under the 107. So that's our euro yen. The euro dollar, not quite as strong a trend. And by the way, here's a quick trading tip. When you're looking for what's best to trade, you want to find the ones in which sellers are less likely, or less able, I should say, to take it down to new lows, and the trend has higher highs and higher lows. Classic uptrend pattern. What I'm looking at when I'm looking at which of the pairs to trade, these are all correlated, right? To some degree, one of the things I look at is which has best relative strength. And so, for example, this chart has weaker trend because of the depth of these pullbacks you can see right here, right? Those show large institutional selling on a basis that is not observed in the euro yen, which is a much better chart. Okay, so when I'm trying to figure out if I'm going to pull the trigger on a euro yen versus euro USD trade, I like to give preference to or trade larger size on the ones that have the strongest trend. Okay, it's just good solid trading, professional trading. So that's one of the things you want to look at. Euro CAD trying to come back to life here, but given a choice, the charts, the euro CAD chart looks like that. The euro yen is the best chart. The euro US dollar also good, but has large pullback. So this one is more likely to go against you the first sign of trouble than the euro yen is. Okay, so you want to look at predictive price action, and that's one of the things that I like to teach traders in Forex trading. So keep an eye on the euro dollar and the euro yen coming up. Also, our pound has been doing very good against various currencies with our cable here. Our British pound to the US dollar also a similar outstanding strong uptrend. And so I'm looking, see the ADX breaks over both the 30 and the 40. ADX is strong. and we're taking out new highs. So I'm going to see if this breaks over that 1616 coming up on the week ahead, or if it loses support under the 1608 and then again under the 160. But the 1616 is the resistance level to look at. So with our British pound to the US dollar, this is a really good uptrend. This is a very strong uptrend. Very similar in nature or trading characteristic price action to the euro yen. Right? This is our euro yen. This is our cable, the British pound US dollar, and similar strong uptrend. So keep an eye on that one as well. Our pound yen is also doing good. This is a great chart, so also worth trading. So of the three out there, the three strongest chart patterns I can see, pound Swissy, no good. That's a bad chart. You don't want to trade that. The best three out there are the pound yen, the pound US dollar, and our euro yen. Those are the three best charts I see out there. So, as a trader, you want to train your eyes, your pattern recognition skills to identify and trade which ones have the best odds charts, right? Which are the ones that are less likely to go against you or have false breakouts and steep drops and drawdowns and the rest of it. You want to focus your energy instead on those selective pairs that have the very strongest breakout patterns and trade those correctly. So, best wishes for that coming up as well. To learn more about trading the Forex currency pairs, I encourage you to get started with my popular Forex Firepower DVD plus webinar training I've put together for active Forex traders. It includes free shipping worldwide and reveals top Forex trading strategies for active traders. You can take a look at some video previews on the site. As somebody who's been a world recognized expert in trading currency pairs, I've been a featured speaker at the World's Forex Trading Expo many years ago and have been helping active currency traders ever since. So go ahead and take a look at forexfirepower.com today. That brings us to the end of the presentation. I hope it's been helpful to you. If you'd like to learn more about how to trade momentum breakouts in stocks, E-minis, Forex, and ETFs, then be sure to see my other resources available online at daytradinguniversity.com. And good news, we just had programmed a brand new updated menu, the Good Web 2.0 professional menu that has very easy, detailed information on various courses and services that are available. And it looks great too, so you can check out things like the alerts, the courses, the various webinars, E-mini training, partners, support resources, and the rest of it. So anyways, I look forward to working with you in upcoming weeks and months and years ahead. Have a great week ahead. Thanks again, and goodbye for now. If you want active trader coaching from a real working trader, then definitely take a look at TradeMastery.com. It's my signature premium coaching service, and what I do is I give you monthly webinars and we look at a variety of different strategies for everything from technicals to financials to entry and exit tactics and more for momentum trades and for position sizing and scaling in and out with more professional approaches than you may have seen elsewhere. Anyways, go ahead and take a look at Trade Mastery. It's one of my popular series for active traders. As you can see, I'm a real working trader, and one of the things that I like about Trade Mastery and why so many other traders have also found it exciting is because I get to do a lot of immersion coaching with you in the webinars. And in these activities, I go step by step through things like you make the call. Where would you enter? Where would you exit a trade based on a specific chart pattern? And wherever you might not get it exactly right, I'll share with you some strategies for how I would personally approach that trade in my own trading accounts and give you some course corrections with immersion coaching. It's a great way to learn how to trade. I'm one of the industry's top go-to guys for active traders. Visit www.trademastery.com today. As one of the world's top published traders when it comes to trading breakouts, I wanted to tell you a little bit about my new Breakout Mastery step-by-step breakout webinars coming every single month throughout the rest of the year for active traders. You can see a video of me talking to you here, and what it's designed to do is teach you exactly how to trade the strongest breakouts with a variety of new trading strategies that are updated monthly with brand new updates and tactics you can start using. We cover breakout strategies for stocks, ETFs, E-minis, and currency pairs. So no matter what type of trader you are, whether a day or swing trader, there'll be something here for you. And look at hundreds of comments from other traders and take a look at a few videos at breakoutmastery.com today.